The Nigerian economy will be more robust if there is long-time investment and involvement of more players in the capital market. That was the viewpoint of stakeholders at the flag off of the Institute of Capital Market Studies at Nasarawa State University, Kefi. Mohammed Awalu has details.
The gathering in this hall has a common goal, that is the inauguration of the Institute of Capital Market Studies, Nasarawa State University, Kefi, which serves as a research-based center that dwells on financial literacy, stock exchange, long-term investments, insurance, security, equities, among others, for the growth and development of Nigerian economy as well as those of the developing countries.
Our vision, distinguished ladies and gentlemen, is to provide a platform for intellectuals and for academics on one hand, and for practitioners and experts in capital market and financial matters.
The Security and Exchange Commission, SEC, is working with the Nigerian Educational Research and Development Council, NTA, to enhance capital market knowledge in Nigeria.
We hope that in the next couple of years, our financial systems will be better, on the basis of output of our programs at the Institute.
The Institute is the first of its kind in Africa. From Kefi, Muhammad Awalu.
Well, at this juncture, we are joined by Director, Institute of Capital Market Studies, Nasarawa State University, our one and only first professor of capital market, Professor Uche Uwaleke. You're welcome.
Thanks so much, Musa. It's indeed my privilege.
I understand that that institute is the first institute in Nasarawa State. Is it in Nasarawa or is it the whole Nigeria?
Well, in Africa.
In the whole Africa?
Yes, it's the first university-based, I have to underscore that, university-based Institute of Capital Markets Studies in Africa.
Okay.
Across the world, you'll find Capital Market Institute in the University of Toronto. In India, you also have something like that. But in Africa, you don't have a university-based, a research-based Capital Market Institute. So that's what we are offering. And Nasarawa State University is the very first, which is why I want to seize the opportunity to thank particularly our Vice Chancellor, Professor Suleiman Balak.
Prof, we must say congratulations to you and Nasarawa State, but let's talk about the inspiration behind the establishment of the institute, and what role can education and research-based solutions play in addressing challenges in our financial sector?
Yes, our financial sector, just like any other developing economy, faces a lot of challenges. Today, we are classified as a frontier economy, frontier market. It's only South Africa, in the whole of Africa, that's even classified as an emerging market, an emerging economy. Then, of course, you have developed markets. And when you are classified as a frontier economy, it means there are a lot of challenges. You are still on the developmental path. Issues to do with liquidity of the market, the debt of the market. So when you have some of these issues, the question is, having identified the problem, how do you go about preferring suggestions or solutions? And any solution that is being preferred must be evidence-based, and that's why we have that's why you have research playing a major role. So you need such institutes to be able to provide evidence-based solutions, solutions that will go to address these issues around market liquidity, market debt, depth and breadth of the market, and the myriads of challenges facing the financial sector, not just in Nigeria, but essentially in Africa, because the focus of the institute is actually, Africa, and that's why we have carefully, structured the programs, design programs that would involve students engaging in researching these areas. In terms of financial regulation, there are issues, which is also why we have a program on financial sector regulation. Today, you can see how our market is structured. There are people that are also of the opinion that we should tailor more alongside that of the UK, for example. But you don't just make a suggestion that is off the cuff. There must be justification for the suggestion you're making. And again, that underscores the role of research. There is also the issue of even debt. Look at the issue of issues we are battling with today in Nigeria with respect to debt. See, look at the debt profile, look at the debt burden, see how much it takes us to service our debt. And today, Nigeria is also talking about going to take further Euro bonds. So what is the best way to manage our debt? Again, research will help in that direction, which is also why we have a master's program in public debt management. And this program is unique. You're not likely to find it in any other university in Africa.
Okay, so how do you envision the Institute's contribution towards addressing, or how do I say, bridging the gap in capital market and shaping the financial sector in Nigeria?
Yeah, essentially it's going to be through research. The research that we conducted at the Institute will be a research that will have practical relevance, because for me, any research that doesn't have practical relevance, it's not just about theoretical relevance, it must have practical significance. And that is going to be the focus, the emphasis. And that's also why it's also an institute where you're going to have a lot of interplay, a lot of handshake between people in the industry and those in the academia. So the professors that are in the institute will guide the research in these areas. So with people in the industry helping to identify these these problems. So at the end of the day, ultimately what you have as output from the institute will be policy recommendations that will serve the needs of the entire financial sector, not just the capital market, but including the money markets, where you also have the central bank, for example, regulating the money market. So essentially it's going to be on the basis of the research output that will be coming up from there. So again, I have to mention, it's not a training institute, so to say. It's not where market operators or wherever are trained. We have a number of academies or institutes that are doing that. Okay, the focus of the university-based institute is simply an independent, research-based, institution that will be out to produce results, outputs that will be useful to policymakers in Nigeria and even in Africa.
Now, to shift our attention to the capital market, you've seen the recent development in the capital market. How would you assess investor confidence so far?
Yes, of course, our markets relatively is doing well compared to what is happening, abroad at the moment. If you take the equity segment, for example, if you compare the results we have there today with what is happening outside, using the Morgan Stanley Capital, the MSCI index, that's for emerging markets. If you look at the year-to-date return, it's even in the negative territory. For developed markets, what we call the MSCI world, is just around 5%. But today, the year-to-date return in our markets is around 39%. So you can say is relatively performing well. But of course, there are risks involved, in this current structure of our markets. A situation in which you have just the industrial sector. If you look at the performance, the industrial sector has performed by as much as 77%, while the average market performance is around 39. Industrial sector is just 77, where you have the likes of Dangote, for example, and Boa Cement. So there is still a concentration risk in that in our markets today, which is also part of what a research institute will be doing to see how that concentration risk can be diluted. Of course, partly by attracting more firms to the market. So our market is doing well, but there are still risks to be taken into consideration when investing in such a market.
What are those risks?
And of course, you also know companies are exiting. Look at the recent case of PZ,
of course.
Also trying to exit, even offering minority shareholders 23 naira, for per share. When, if you check the current price of PZ, for example, is at 14 naira per share. So I'm happy that Securities and Exchange Commission, rejected the, the request made by PZ, majority shareholder, to buy over the minority shareholders at just 23 naira, per share. So that's a good one coming from the Securities and Exchange Commission. I want to see more of such, regulatory actions on the part of the SEC.
Okay, we keep talking about all these big companies when it comes to the capital market. What about small and medium-scale enterprises? How can they take advantage of the capital market to access funding, like startups as well?
Yes, of course, I'm aware that the Nigerian exchange also has a segment that is meant to attract, small companies. Initially, we had the alternative securities market, but that has now been replaced, by the growth, the growth segment of the market. So there is the growth, the NGS growth segment that's also meant to attract, startups, to the capital markets, all with a view to helping them increase capital. So I think it boils down to the issue of awareness, the capital market community entirely. I wouldn't just say the NGS, should be part of sensitization and creating this awareness that the capital market has a lot of opportunities, a lot of space for also small and medium enterprises. Because come to think of it, there's a limit to which the banks can do in terms of funding. The banks can only give you short-term funds, but it's only from the capital market that you can raise medium to long-term funds. Essentially, our economy, I would say is a market-based economy. There are economies that are bank-based, okay, and then you also have economies that are market-based. The U.S., for example, is a market-based economy, and I think we are trying to take after that of the U.S., a market-based economy where long-term capital plays a lot of roles. Yes, even though I recognize that banks tend to be dominated, but essentially is actually a market based economy. So the opportunities are there for small medium enterprises to also approach the capital market to raise long-term funds.
Okay, the market seems to fluctuate in gains at a time when more investment is needed. Should we expect more listings from companies into the market?
Yes, I think going forward we should. At the moment, we have just 155 companies quoted on the exchange for a country that's as large as Nigeria, largest economy in Africa. Yes, forget about the issue of currency depreciation or devaluation. The economy is still large relative to many other economies in Africa. With our population, with our size, I think many more companies are expected to list. And part of what we ginger that is also for the government to take the lead, which is also why I will always recommend for any privatization efforts on the part of the government to be through the markets. We expect to see the NNPC, for example, we expect to see some other government enterprises coming to list on the markets, just as we had in Saudi Arabia, where Saudi Aramco, substantially owned by the government, is listed on the Tadawul. That's the Saudi Arabian stock exchange. So we expect more companies to list on the exchange. That way, of course, the depth of the market is improved. That way, its contribution to economic growth will also be enhanced. And remember, I also said it's important that is done to also de-risk the current level of concentration risk, in that market today. Government can also use incentives to also attract companies, to list. The incentives could be by way of tax incentives. It can also be by way of even access to forex. There has been this suggestion that companies quoted on the market should be given preferential treatment when it comes to access to forex. So that way you find more companies coming to list.
Okay, thank you very much, Director, Institute of Capital Market Studies, Nasarawa State University, Professor Uche Uwaleke. It's always a pleasure having you on the program.
Thank you, Musa, for having me.